Welcome back to Market on Close. I'm Diane King Hall. I'm in for Oliver Rennick. Let's take a look at the commodities market. For that, we're joined by Phil Strebel, Chief Market Strategist at Blue Line Futures. So we'll start out with a look at crude oil. So this week, we had geopolitical tensions as the backdrop for what was affecting a lot of things in the market. Oil finishing slightly higher on the day, but down for the week. Does that line up with what your expectation was, given the geopolitical tensions that we've been watching?
Well, it was definitely a volatile week. I mean, Venezuela coming online, starting to put out more crude oil. I think that's what really kind of broke the crude oil market down. Yet last night's volatility in the market with the Mideast tensions, I wasn't really expecting the market to give back all of its gains here. And, I still think production cuts, a robust economy is all going to act as tailwinds in the crude oil market. We've had 4 straight weeks of inventory builds, so that it also does weigh in on the market. But look at the picture year to date. Crude oil is up about 17%. So it shows you that structurally we're in a bull market right now.
Okay, so what levels are you watching with regard to crude oil in terms of the direction that you expect it to go?
So quite simply, you don't want to see the front month contract close below $80 if you're a bull. But if you look at the range we saw last night, if we could take out 85.50 on the upside, I think it's game on and the market could head a lot higher. I'm a little disappointed by the close that we have right now. Today, we see the liquidation going on in the equity markets. I don't understand why people wouldn't be trying to bid up at least the crude oil market the same way they're bidding up, gold and silver at the moment. So that safe haven play, if you do get an escalation over the weekend again, I think people are going to quickly rush into it on Sunday night.
All right, let's pivot to another asset that we've been watching, especially today. Bitcoin has been in focus, waiting on the Bitcoin halving, continues to trade in the mid 60,000s. How do you expect this action, this halving, to impact the price of Bitcoin and crypto assets in general?
So the last 3 halvings that we watched in 2012, we went from $12 to about $125. In 2016, it went from $600 on up to over $1,000. And then in March of 2021, it was at a structural low at about $8,700, and we rallied up to 60,000. So this has been a bullish tailwind for Bitcoin, but I don't see it as the safe haven asset. And it was really that was exposed last weekend when we saw the escalation over in the Middle East, and Bitcoin futures and Ethereum were all crashing. So it has the limited supply and everything, but you're going to need to see interest rates come lower. You're going to see the NASDAQ that needs to catch a new wind back to the upside in order to really get Bitcoin going again. I don't think that it grabs any big headlines until it's back over about 72,000.
And it's so fascinating to me, the argument, especially from Bitcoin bulls, that it's a safe haven asset, because it doesn't make sense to me, especially when you see kind of the volatility around it. But let's talk about another asset class, the dollar. It's pretty flat today, but it's moved higher recently with more kind of hawkish talk you heard from Fed governors. What's your outlook for the dollar?
It's really anchored at 106 right now. A breakdown below like 104.30, I think, would kill the bulls in that market. 107 seems a bit stretched. I mean, you can't get much more hawkish other than the Fed coming out and saying that they're considering raising rates again in order to get the dollar much higher. But you look over at Europe, all their economies are pretty weak right now. They're going to have to cut rates a little bit faster than the U.S. So you get the euro currency, which comprises about 50% of the dollar weighting in the basket, and these other currencies out there start cutting as well. You're going to see the dollar index get a little bit of a boost. If we could get this inflation down, the Fed pivots to where they actually make that first cut, that'll mark the top in the dollar.
All right, and really quickly, I want to just talk about where the VIX is. It's right now, it's around 19, just shy of 19. What are you paying attention to? What levels, and what does this tell you about kind of the state of volatility in the market right now?
Those October highs, about 25 to 30, that's the watch out level that also marked the bottom last year. I think the line in the sand is about 1575. It does have a higher low on the chart, and it's finally getting some traction to the upside. I mean, it feels like the floodgates are opening a bit on U.S. equities. A lot of stocks trading below their 50-day moving average, but still over the 200-day moving average at the moment. We'll want to continue to monitor how many of those stocks are giving up some of those key levels here, and then how much of firepower is in this sell-off. I'd say the next stop on the S&P 500 could be the 200-day moving average, right around 47.5.
And final thoughts on any levels you're watching in particular as you set up kind of for the rest of the month and into May, Phil?
We're really watching like the gold market right now. We want to see that thing hit $2,500. We want to see silver break out over $30 and start achieving the 35 level. So there's a lot of commodities out there that's got some great stories, like copper, for instance, just exploding the upside. Looks fantastic, which some of the other industrial metals could play catch up, like platinum and palladium.
Well, gold has certainly had a run week after week after week recently. I think it's, 4 or 5 weeks in a row now. So certainly one to watch, and, the more traditional of the safe haven assets. All right, that was Phil Strebel, Chief Market Strategist at Blue Line Futures. Always great talking to you, Phil. Have a good weekend.
You too.
All right. Coming up, we'll close out the